So the next indicator we'll discuss is the on-balance volume, or OBV. So the OBV is a momentum indicator that measures volume flow to predict future price direction. So it measures total selling volume versus total buying volume over a period of time. Increased periods of buying volume versus selling volume suggests that price could go up in the future, right? If more people are buying, that means that those lower prices are going to increase because the demand is increasing, right? Overall demand is increasing, and if supply is remaining the same, buying volume will overtake selling volume, prices go up. Now, in contrast, increased periods of selling volume versus buying volume suggest that price could go down in the future. If you think about it, demand for the asset is decreasing. People are wanting to sell. There's more people selling than are actually buying. That is an indication that prices could go down in the future. Now, note, it does not function like previous oscillators, which ranged from 0 to 100. The OBV has no ceiling to how high it can go, as it is an actual measurement of volume. So here's an example. This is Bitcoin, the daily chart, and here is our OBV indicator. This is actually a simple moving average of the volume metrics. So here we see a more of a smoothed out, a rounded figure of on-balance volume. And as we see generally, as prices are going up, we see a trend where overall volume was increasing, right? We saw extreme amounts of buying volume, buying pressure here observed in January, February, March, and April. These were high points of overall interest in Bitcoin and buying volume, general volume. And that is reflected in the OBV, and it's also reflected in the price action, right? It was very volatile to the upside. We saw these extreme price movements upwards. And the same in reverse, though, we saw very volatile crashes to the downside, especially in May, and also observing in December 4th or 5th when this flash crash on Bitcoin occurred. And we'll take a look at these different examples. So from May to about late July, we saw this general downtrend, right? This general trend. Prices are just ultimately just falling and really bleeding out. It was a very long 2 months if you were unable to short. And we saw the same thing reflected in on-balance volume. Generally, selling volume dominating the plane. And we saw this sharp reversal, right? We see overall on-balance volume was coming up very, very severely and staying at these elevated levels throughout the first 3 to 4 months of 2021. And then this overall sharp reversal, a severe, it's like driving off a cliff at this point. And then it was just like a severe directional change, and we really only saw a significant shift going into late July, which correlates with the overall market reversal. So this was a particular sign, especially forming here this low and then forming a higher low at this point. If we wanted to think of this as a general trend, we could have considered this as a general trend break, right? We broke past this level and started to form new highs in terms of buying volume at these particular moments. And even just looking here at this particular moment, we formed a high and then formed a new all-time high in November. At the same time, on-balance volume was coming down, indicating that selling volume was increasing as price was going up. So this was considered a bearish divergence and a market top that this should not have been happening at this particular point if we were going off of volume metrics alone. Let's talk about a bit about how the OBV is calculated. So it's based off of 3 main scenarios. If today's closing price is higher than yesterday's closing price. We're using days in this particular example. If you're using, it depends on what chart you're looking at. So we're going to be talking about this as if we're looking at a daily chart. But if you're looking at the hourly chart, you'll be looking at hourly closes, or the 12-hour chart, 12-hour candle closes, just to keep that in mind. So if we're talking about a daily chart, if today's closing price is higher than yesterday's closing price, then the current OBV, the positioning of that line, would be equal to the previous OBV plus today's volume. Now, if today's closing price is lower than yesterday's close, then the current OBV would be the previous OBV minus today's volume. Now, if today's closing price is equal to yesterday's close, then the current OBV would be equal to yesterday's previous on balance volume. So now that we know how it's calculated, we know that it's heavily based on general volume and buying pressure and whether or not prices went up or down in that particular day. Let's talk about how to read this. So the OBV can be used for trend identification and confirmation. OBV going up indicates buying volume is outpacing selling volume, suggesting price will go up. OBV going down indicates selling volume is outpacing buying volume, suggesting price will go down. Now, we also want to consider correlations and divergences with price action. The OBV will typically go up as price trends upwards, and the OBV will typically go down as price trends downwards. Now, what happens when there's a disagreement with this? Divergences between price and OBV can indicate a potential trend reversal in the future. Similar to divergences found in the RSI or many of the other oscillating indicators that we've spoken about, we were looking for disagreements in price and on the indicator itself, whether the price forming higher highs and the indicator forming lower lows, right? And if you're not sure about that, be sure to check out our lesson on RSIs and on MACD and the MACD indicator for a in-depth talk about identifying divergences. Now, just to kind of reiterate that, price goes up, OBV goes down, indicating bearish divergence. Price goes down, OBV goes up, indicating a bullish divergence. Let's take a look at a couple examples. So here we see Bitcoin, US dollar on the 4-hour chart. Prices are generally coming down, right? Pretty obvious downtrend at this point, right? We're seeing a high, a low, lower high, lower low, lower high, lower low. Just general price direction, right? And remember, we want to base all of these indicators. Any analysis that we use on any indicator is always going to be based on the chart itself. So really force yourself to look at the chart, have an understanding of market structure, where is price going. Once price is trending in a direction, it takes a lot for it to reverse. And as we saw, this took about 3 months for this to truly reverse. And even if we look at previous bear markets, if you will, bear markets could take months, if not years, to recover. Now, taking a look at the OBV is in a downtrend, especially after this point. We're at these elevated areas in price and overall buying volume. And then we see this, I drew a trend line here, and generally the pattern or the general trend of the OBV indicator was downward, right? We were forming these a high, low, lower high, lower low, lower high, lower low, lower high, lower low. And like it many times, 1, 2, 3 times at least, 4 times, it struggled to break past this downtrend, right? And things were starting to tighten around here. We're starting to get pushed down to this lower level. Now, notice how price reacts when the OBV breaks out of the trend, particularly here. This is when we start to see when there's a significant push back up to the trend, to this trend line, and then breaks out of it. And even forms a higher high compared to the high before it. This at the same time is when we see this particular breakout. Price fell to a low of about 20, maybe the 29K, give or take 28K, and actually went back up to 34K. So that was a possible relief rally that we could have longed, right? And at the same time, if we're looking at these particular trends, so that was a contradictory. We're going against the trend at that point, right? If we wanted to trade with the trend, and we know the trend is coming down, we know prices are coming down, we could just look to short these tops, right? So price is coming up, price bouncing is hitting at this resistance level. How do we know it's a resistance level? Well, price came down to here, and it acted as support. It finally broke down. It came back up to here. It was obviously failing to close in a meaningfully way above this level. Price comes back up to it, comes to retest it. Well, the trend tells me, well, unless something is very obvious and there's a meaningfully reason to believe that the trend has reversed, it hasn't reversed yet, right? The trend is your friend until the end. It's a common saying. So we came up to here. At the same time, we see the OBV attempt to form some sort of high or a high above here. We could have shorted at this high and been profitable at that point. Same thing here. We see the OBV coming up at this level, right? OBV comes up to this level. We could have shorted. OBV comes up to this particular level in the trend. We could have shorted. And even if we lined up with that, this comes back up to that same level of resistance, right? So we want to look at the market in multiple angles, not just one thing. It's not just about just the OBV or just the market structure. We're looking to piece together in a solid case for our trade, right? It shouldn't be based on just one thing. We were looking for confluence where multiple indications, multiple analysis methods are all in agreement with one another. We know we're in a downtrend. We're testing this level yet again, right? Yet again, we're testing this 40K, 42K level. We've been rejected here multiple times. We know this is a significant level of support and resistance. It's a significant level of a pivot point. And the OVB coming up to this trend line, even if this failed, this would have been a logical short because we're trading with the trend. Worst case scenario, it fails. But if you shorted each one of these rallies, each one of these tops, you would have been profitable 1, 2, 3, 4 times. Let's say you tried it out 4 times at least, not even counting any of this. 1, 2, 3, 4 times out of the 5 trades. So you lost 1 trade and you won 4. That's not bad. Here's another example. Notice how price continues to go up, as we see here. This is Ethereum on the daily chart. Ethereum forming a high, coming back down, forming yet another high. Price continues to go up, but OBV fails to produce a higher high to correlate with that, and this is a very strong indication at this point. So with this OBV, I actually placed a horizontal line. And I placed this here mainly because I'm seeing that, well, this was a significant level of support, right, and in the past. And I'm also placing it here. Well, price formed this high and it came down. Price is forming yet another high and is continuing to surpass the highs established in early September when we placed this high, right? The OBV formed this high. Price is continuing to go up, but the OBV on multiple occasions is testing this level, but failing to produce noticeable highs above the previous high. So this is a divergence, right? Price is going up. OBV is staying the same and failing to correlate with it. So this was a sign that buying volume is not supporting what's actually happening on the chart. And we could have made the argument that this is an unfounded move, right? It's unsupported. It's not fueled by actual buying volume. Possibly could be fueled by speculation. It doesn't matter what it's fueled by. What's more important is that we know that it's unfounded and that this is a sign of a bearish divergence and that of a potential market reversal and a market breakdown, which we did see as a result. Now here's some final considerations on oscillators. So oscillators may be most effective when the selected asset is trading sideways or range bound, where there is an identifiable floor and ceiling to price action. This goes for really all the oscillators, the RSIs, the stochastic, MACD. They can be best suited for those situations. Not to say that they're only suited for those situations. You can use them in trending environments and volatile markets, but they can arguably be best effective when you can identify a range and you can confidently pinpoint and rely on those signals. Now, it must be said, oscillators and really indicators in general, any indicator, they're most effective when used in conjunction with other analysis methods such as moving averages, lines of support and resistance, market structure, Fibonacci levels, and other charting tools. Now, volatile markets, extreme volatility, may dilute the information powering oscillator indicators, where false indications may be shown more frequently. And this can be seen especially in particularly volatile markets with extremely high volume, and sometimes we've seen this in altcoins such as Dogecoin or even Shiba Inu. Shiba Inu in October had about a week or so of extreme volatility, and sometimes the indicators were not always as reliable. So it's something to keep note.